right, it is. We're going to begin in Nigeria. Third quarter GDP coming in at, here we are, 3.98% year on year. This is real GDP growth. A bit of a slowdown from the 4.23% that we saw in the second quarter of this year. Fastest growth that we saw initially, that's right here, in about 4 years. So we're about to have a full conversation with our guests joining us today from Meristem Research. Felicia Awolope, who of course is the lead analyst, lead economist at Meristem Research. Felicia, thank you so much for joining us. It's good to see you. Welcome to December.
Thank you very much, Francis.
So, I mean, looking at the growth, right? Well, I guess I wanted to start with, what do you make of the trajectory of growth that we've seen for as far as Nigeria's economy is concerned, and also your thoughts on this third quarter?
I mean, like it's here on the screen, you would agree with me that the broad trajectory has been an uptrend.
Yeah.
It looks like growth is steadily improving. While I would not say we've gotten out of or we've reached new levels here, right? But growth has been steadily increasing with, some periodical moderation, sometimes due to high base effect, sometimes due to peculiar situations that happen during the quarter. And I would say we can, of course, attribute this to the fact that even in the economy, macroeconomic indicators are improving slightly, and so of course we are beginning to see the impact on the numbers. And of course the bulk of this growth has been largely non-oil driven. You agree with me?
Yeah.
And so the oil sector has been a bit volatile with quarters of growth, quarters of slower growth, but non-oil sector has remained really resilient.
Now, I wanted to ask you about the contributions to GDP, right? Services making up about, I think for this third quarter, 53.02%. Yeah, then we have agriculture at 31. But Felicia, I wanted to ask you about, is this being held back by the informal sector? What's your makeup of how much services contributes? And is services being held up on the fact that we have so many people performing these services in the informal sector? What's your take on it?
Definitely.
Yeah.
I mean, looking at the kind of subsectors that we have under the services sector, we have sectors like trade, which is largely informal.
Yeah.
We have construction, we have retail, real estate, we have education. A bulk of the activities in the services sector is largely informal. And what it means is that we might be underperforming our potential because in an informal setting, there are less structure put in place. There's less asymmetry of information, which means that some people might have access to information while some don't. Even access to credit, it just means that the fact that it is informal, the informal nature of that sector of these activities would not, help productivity. Productivity might not be up to potential. Then we might just be underperforming what we can actually do. And well, it is the nature of the services sector of Nigeria. Of course, it contributes slightly over half of what the economy is doing. And if you agree with me, employment, labor and all these things, they are much concentrated in this sector. But the informal nature of this sector would mean that we might be underperforming. Productivity might be less than it should be. Efficiency might be less than it should be. Even estimating the figures are not going to be as effective as it should be because of the informal nature of that sector. Gotcha.
Now, beyond that, let me piggyback off that. If you look at the, top 10 contributing activities to GDP, crop production has continuously been number one. You mentioned trade, 16.2, real estate. With crop production, with so many farmers being subsistence farmers, is it possible to get misled by how much it's contributing? Or are we really getting what we need from that sector in terms of what is contributing to GDP?
To still, start from my point that I made. So, I know I've been here, I've been here a while back where I spoke about the nature of the Nigerian agricultural sector, where we have a lot of subsistence farmers. And it means that this output that we are seeing is the aggregate of, output from a lot of small-scale farmers. Yeah. It would mean that, imagine if we had the wherewithal, if we had the machinery, the technical know-how to improve output from all these farmers. It would, output would improve significantly. Yeah. So yes, growth looks like it's contributing a lot, and it is, to be very honest. But this is just the aggregate of millions of small-time farmers that are just trying to make ends meet. And so yes, the contribution is significant, but do you think are we doing up to what we can? We can certainly do better. I mean, there are still other factors like insecurity that is still limiting even what this output from these small scale farmers are. We still have, things like the inadequate storage system.
Yeah.
That means that a portion of this output from these small scale farmers are wasted.
Yeah.
Some even get wasted before they get to the market. Some get wasted before the harvest season is over. Some get wasted just slightly after the harvest season is over. Yes, they contribute significantly, but we certainly could do better.
Gotcha. Now, I do want to get to the contribution of, I guess, in totality, non-oil and oil. In the blue bars, of course, historically, non-oil contribution has been 95, 96, 96, and so on. So in fact, up to 97% in Q4 of 2024. But for this most recent quarter, for our viewers, in blue, 96.56 for non-oil, and oil is at a contribution of 3.4. But Felicia, I want to ask you, the FX impacts from the oil sector, doesn't that still make it dominant, and is it possible that one can be misled looking at these bars thinking that non-oil? I just want you to look at the FX impact of non-oil and the oil sector.
I mean, it depends on what aspect you're looking at it from, right? If you're looking at FX generation, yes, the oil sector is the major driver, and that's because a huge product or output from the oil sector is exports. Mm-hmm. Is exported rather.
Yeah.
I mean, and that means that they are able to generate FX income. But the bulk of activities going on within the economy are not concentrated in the oil sector.
Right.
You would look at trade, you would look at manufacturing, you would look at agric. They are the major growth engines of the economy. But because the bulk of product and output from the oil sector are exported, it means, yes, we generate more FX from the oil sector, but really the oil sector is not the major growth engine for the economy. And what that speaks to is the fact that the non-oil sector is not generating FX as much as it should, because the bulk of the outputs are not exported. They are not even enough for the domestic economy. And Nigeria is even an import-dependent economy. So we're not producing enough for these non-oil sectors to be able to export significantly to generate as much FX as we should. And that is where we should be looking at.
Gotcha. Now, going to oil now, I wanted to get your thoughts on oil production. Yeah, so getting to 1.64, I know it was 1.68 in the previous quarter. And then also looking at the growth of the sector, I think it did about, was it 5% or so?
5.84.
5.84, thank you. See, that's why you're the lead economist at Meristem Research. So what is collectively taking oil production and then the growth? What was your take on the growth of the sector?
Well, coming into this year, we expected that we would see better output from the oil sector because we've seen a lot of incentives from the federal government, favorable fiscal policies that are geared at improving participation in that space so that output would improve. And of course, we've seen that play out in the improved security around oil infrastructure, which has limited slightly, maybe not eradicated completely, but the impact of vandalism, theft, and all these activities on our output. And of course, we are beginning to see the effect on the numbers with oil production, total oil production for this year has broadly stayed around over 1.6 million barrels per day, except for in September, when there was a Pengasan industrial action, linked industrial action that sort of affected output for a couple of days. And so, yes, improvement, definitely. Are we out of the woods yet? No, because we certainly can produce more. Yeah, we are still not producing. Even if you look at budgeted figures, the fiscal policy governments, they budgeted 2.06 million barrels per day production for this year. And so we are still performing lower than budgeted, but of course there's been improvement, even when you look at the charts relative to previous years.
Now on the, I thought we were going to put the growth, but so this is the growth. So 5.84 as you said. Now, so moving on to non-oil, I did want to get your take. So we did 3.9 for this quarter compared to last year, 3.7 and preceding this quarter. So it was greater than both, right? The preceding quarter and last year. But I guess let's talk about agriculture now. You did mention insecurity. I mean, what did you make of the growth in agric? I mean, 3.7, higher than the prior quarter of 2.8, higher than last year of 2.56. With all this talk of insecurity, I mean, look, it's funny. I made a note that of the major papers, I think only one of them had GDP growth as the front page story. I think it was the Daily Independent. Everyone else, and obviously so, was about insecurity. I think the defense minister has resigned, and health reasons. All that's going on. What do you make of this growth in spite of everything else?
Well, it's Q3, and that's it's the major harvest season for Nigeria. And so why, it would look like, yes, there's insecurity going on. There's still going to be improved outputs, increased farming activities. Farmers that can still go to the farm will still go to harvest some of this output, and it's still going to flow into the market and all that. And so, yes, we definitely are benefiting from the harvest season. If you look at periods when there was no harvest, 2.82. That tells you that harvest gave the lift. And if you relate it to Q3 last year, we had, flooding last year, which limited harvest output. But for this year, weather has been pretty much stable. And so we're seeing the lift just from the harvest season, majorly from the harvest season. Of course, there are other factors, other incentives and initiatives rather that the federal government is implementing in the agricultural sector to improve food production generally, that we might start seeing the benefits, gradually over the next couple of years, because the agri sector, even if you make implementations today, it's still going to take a while.
Right,
even if they plant today, it's still going to take time before we start seeing, harvest. And so, we might gradually start to see the improvements from some of these initiatives. But for this Q3, I would say the number majorly benefited from the harvest season. Harvest activities really give the push.
Great. Now, I want to get to manufacturing, Felicia. And I know you've talked about manufacturing in the past. The Manufacturing Association of Nigeria has consistently talked about how they need more support. These numbers, anyway, I'll get your take. They don't look too good. 1.25 in the third quarter for the manufacturing sector, slow down from the Q2 1.5. But look at Q3 of last year was 0.76. We may have heard this several times, but just again, for the sake of those that don't know, what's happening with our manufacturing?
Unfortunately for the manufacturing sector, they're right in the middle of the major macroeconomic headwinds in Nigeria. Talk about elevated cost of borrowing, they are in the middle of it. Talk about FX-related pressures, because it increases their input cost, and they are largely dependent on importation for key inputs, for machineries and all that. And so, they're in the middle of it. Talk about inflation even limiting the purchasing power of consumers and how it affects demand. They're in the middle of it. So really, it's just a combination of several macroeconomic headwinds. While we are beginning to see improvement, because some of these headwinds are beginning to, they are beginning to moderate slightly. FX has been stable, inflation is moderating. And so as much as we begin to see some of these conditions become better, then we would expect that output from the manufacturing sector might increase. But for now, they are in the middle of these headwinds, and so it would continue to limit their growth. Okay,
next up, information and communications, which of course includes telecommunications, ICT. Felicia, if the internet goes out now, I'm done. I'm finished. I remember when that cable was cut, was it last year, and how many people it impacted? There's all these glitches and internet outages all over. Can you speak to the importance of the information and communication sector? Real GDP, so 5.78 in this quarter. It did slow down from the preceding quarter of 6.61, and this time last year 6.8. So what do you make of the growth there? And I guess the importance of the sector.
I would say the sector is quite important. Contribution to GDP wise is one of the top 5 sectors. When we speak to contribution, and when you speak to contribution to growth, it is still some of the top 5 sectors contributing to the growth in GDP. And of course, it is because we are shifting to a more digital age. Almost every other sector is dependent on services from the information and communication sector. And so we are seeing increased smartphone adoption, we are seeing increased subscriber base, increased data usage. A lot of people, like you said, a lot of people are dependent on data to make their own daily bread. And so this means that the sector will continue to benefit from its interdependency, or from the fact that it provides services across every other sector. And also, if you look at the fact that the industry, particularly the telcos, were able to get a 50% tariff increase, which is one thing that increases their capacity for business investments. It is also another silver lining for the information and communication sector, which are all part of the factors, or is part of the factors that we are taking into consideration as we project
growth subsequently. All right, I really want to get your thoughts on this. Financial services, finance and insurance. I mean, this was, double digits. I mean, 19.63 for finance and insurance. It was 16% in the preceding quarter of this year, 4%, last year. Can you speak to the growth there and what we're seeing in finance and insurance? I mean, if you it's a bit related to what I just spoke to for the information and communication sector. Even for the finance and insurance sector, we are seeing some of these players diversify their business, expand. They are coming up with new products, digital products. They are leveraging on even the digital sector to improve their services to their customers. And what it means is that their volumes are increasing. And this is one thing that will continue to drive growth for them. And the fact that, we're into this era of financial inclusion, bank the unbanked, it presents a whole opportunity for them to improve numbers, to extend their reaches to other markets, even outside Nigeria and even within Nigeria, regions where the bulk of the population are underserved when it comes to financial services. All right. But I would like to mention that why it looks like growth is double digits, actual contribution to total GDP is still a bit low. There's still room for significant improvements, but contribution to growth is not so bad. Fantastic. All right, Felicia, you've been fantastic. Thanks for taking us through the seconds. I want to get your outlook for Q4 and I guess full year. You don't have to necessarily give us any numbers if you don't want to, but just in terms of activity and how you see things to wrap up 2025. I mean, if you look at what is driving, GDP numbers, I would say consumption demand is a significant factor. And when we're moving to the end of the year, there's buzz. There's a buzz around that sector. Demand increases across services, across manufacturing, across industries, and they are upside factors for economic activities. And if you even look at PMI, steady expansion throughout the year, and we expect that to continue. So we expect that growth for the last quarter of the year is going to be strong, maybe slightly higher than what we've seen in Q3, and maybe around 4%, slightly above 4%. And this is because, of course, we expect demand to be strong as consumption increases. And with the fact that there's no significant worsening in macroeconomic conditions, all this put together just speaks to the fact that growth could still see quite steady and strong for the Nigerian economy. And for next year, we think that good trajectory would continue. If you look at the chart that you showed at the beginning of this conversation, it looks like the growths are not just a one-time thing. It has been steadily increasing. And that means, undertones of improving fundamentals for the economy. And so if that continues, we'd expect that to continue to reflect in growth figures. All right. Look, Felicia, it's always a pleasure when you make time to come and talk to us to break these things down. Really appreciate it. Felicia Awolope, lead economist at Meristem Research. Thank you so much for your time.